Everybody, how's it going this morning? How is it going? Dun, 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 dun. We are live. Let's see. And trying to get it going here. Trying to get it going. Welcome to the show. Finally, there we go. Everything's in the right place at the right time. Welcome back to the show, everybody. It's another edition of Factor Crap. No, it's the Morning Monster. And let me start a poll here. 2025. Is it going to happen? Place your votes. There's no, I can't see who votes anything. Anonymous poll, so you can vote however you want to. And the earth shaking, sky falling, 4 horsemen of the apocalypse riding through Wall Street. According to the internet, basically the end of everything. Maybe, I don't know. That little wobble we had in the market last week, is that it cranked fear up. The fear and greed gauge on CNN went from greed all the way down to extreme fear. So that kind of shook the market a little bit. Everybody was pretty scared. It's kind of like a lot of panic in the finance forums. It's kind of like somebody yelling fire, right? Every time the market sneezes, 1,000 articles pop up predicting this great new depression thing. It's a whole cottage industry at this point. We're probably going to have one. It's probably... I'll be surprised if we don't have like a greater depression, but the wobble, that's kind of what we had. Just a normal, we did the same size pullback we did a couple months ago. And everybody's like, is this the big one? Is this the earthquake? Are we in LA? Sell everything, buy a bunker in New Zealand? I'm permacautious, all right? I feel it's my duty to, with all the rhetoric out there, I don't just flip-flop. I'm always telling you, be careful. Nobody has interest in your money more than you do. If you don't take an interest in your money, you're bound to lose it to the market, all right? It's the hardest game in the world. If you don't stay on top of every second of every day of every trade you do, you're going to lose your money to the market. It's the way it works. All right? Now, if you're a long-term investor, it's a different story. But if you're a trader looking for the short term, you got to stay on top of every single move. You can lose your money quick, especially if you're trading options or any kind of leverage. The market loves to just take advantage of people, right? They like to make your money into their money. That's the whole goal here. But the panic merchants out there, they don't want you to know. Well, everybody's running around with their hair on fire the last week or so. The so-called smart money was, kind of yawning. Goldman Sachs, this is a vampire squid itself, put out a note that basically said, relax. All of this repositioning is just a shuffle in the market. Think of it kind of like this. You're driving down the highway. You hit a little patch of gravel. The car shimmies for a second. Do you immediately start yanking the wheel? Jump out of the moving vehicle, assuming everything's about to explode? No, you hold steady. You let the car find its grip on the road again. Or you keep on driving. That little shimmy was November wobble so far in the market. It wasn't a sign of a 4-piston pileup. It was just kind of a moment for the market to pull some of that profit off. Shuffle the deck a bit. While the headlines are screaming, yikes, the big players have been looking at the fundamentals, and what they saw made them pretty confident, at least the ones at Goldman Sachs, that our end-of-the-year party, the legendary Santa rally, still very much possibly on the guest list. So why is Goldman Sachs so calm about this? It's not because they have a crystal ball. I mean, I don't have one either. I've got a bag of unicorn dust. I love this stuff, but you know, it only goes so far. It's no crystal ball. And they're looking at the data, these Goldman Sachs traders. The data kind of tells a pretty interesting story. First, the biggest, most reliable buyer in the market, S&P 500 companies themselves, and all the other ones. So we have the open window is now opening wide open for corporate buybacks. In simple terms, the companies in the S&P 500 themselves are legally allowed to buy back their own stock now that they're past their earnings blackout window. They're doing it with gusto. Like, this may be the biggest buying that we've had all year, this quarter. Around $6 billion in demand every single trading day this month. That's not chump change. It's kind of like having a whale in the market who just keeps buying, putting a nice comfy floor under the prices. Now, this party does have a curfew. The next blackout window starts December 19th. So mark that on your calendar if you want to. Until then, the corporate credit card, it's out there getting swiped. Buy some shares, buy some shares. Now, the other factor in the market is you. Yeah, us, retail investors. So-called dumb money, as Goldman Sachs puts it. We have a quote-unquote ferocious appetite for stocks right now. While the institutions were having a little bit of wobble, trying to reposition themselves, the retail army that we've built out there has been buying the dip like crazy, holding the line. We've got almost 52% of our assets in equities, and we're not flinching. It turns out the dumb money has some pretty diamond hands these days. We don't panic easy, is what the numbers are showing. And there's the history lesson. The panic sellers forgot to check their homework. History shows that when the market has a great year leading into November and then has a little down week to start the month, historically, that's actually very bullish. Overall, on average, the S&P rallies more than 3% to close out the year when we have the exact same pattern we already set up. It's counterintuitive, but this is the way it works. This wobble isn't a warning sign. It's actually kind of a launch pad, if you will, repositioning to take advantage of what may be a nice return. Could this be the year that breaks the pattern? Sure. So that story's nice, right? But what does it mean for our portfolios? How do we make money out of this? Where's the opportunity here? Well, the first one's pretty obvious. Tech sector, mega caps, AI-driven darlings. Everybody might be sure they've peaked, but when they dipped, who was there to buy them? Retail traders were. And when you're right, well, the money's still flowing into names like Nvidia and Broadcom. I think Meta might be nearing the bottom. This one, that chart has a great upside. Nvidia, not so sure we can go, we may make one more high, but it may have a downside to it. Be careful, the charts are telling this tale. The AI revolution isn't a fad, it's the future, and these companies are selling shovels. They're the ones making the equipment that runs on this. Got to be careful. Eventually we'll run our course, but that course could be another year, 2 years down the road. So it's something to think about. But if you're tired of the high-flying tech names, tired of the volatility there, what if you wanted something a little less glamorous? Well, smart money also starting to pick up some value stocks. These are boring companies. These are ones that make actual stuff, have actual profits, don't trade it 100 times earnings. I mean, they're sturdy, they're reliable, they're the pickup truck to Tech's flashy sports car. But Goldman is seeing more and more money flow into this sector, and they think it has potentially quite a bit of room to run. And for those who like to ride the wave, there's momentum stocks. I mean, it's a simple strategy. Buy what's already going up. The Goldman report highlighted that the momentum basket is up almost 20% since July. It's the classic trend is your friend type of play, and right now, trend is pointing up. So, what's the takeaway? The market, it's been trying to shake us out. It wobbled, it shimmied, did its best to scare out everybody. But the underlying story is still strength, and the pattern that we've already established this month supports going higher. Corporate buybacks are kind of a safety net with $6 billion a day for the entirety of November. Retail traders holding strong. History's on our side. Of course, the Senate rally isn't ever guaranteed. All right, of course, nothing in this game is guaranteed, except if you're not paying attention, the market will take your money. But the pieces are in place for a strong finish to the year. Ignore the noise, do your homework, do your research, find the darlings. The best time to be greedy is when others are fearful. Last week was a whole lot of fear. I think we're going to see another little pullback, but we might be off to new all-time highs. So let's check out some charts, see how we make money today. Thanks for being here, everybody. Couldn't do this without you. Welcome to the show. Welcome to the show. And in the poll, flip over here. Where'd my poll go? There it is. So 85% say Santa rally, 15% are pretty pessimistic. And all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries, and stuff from gurus like me. Don't buy stuff if you don't trust me. I make tools for traders, try to make cool stuff, and if you don't like it, don't buy it. It's kind of the bottom line. Thanks for being here, everybody. Except we got a little bit of a light crowd today. Tuesday is my 30 Minutes of Awesome show at 5 p.m. Just a reminder. And did the government play Let's Make a Deal? So we have sounds like it's gonna be at least Thursday before anything gets done. And I don't know. More than 42 days, but more than 43 days is not in the cards, it looks like. So it looks like firming up on this right around 42 days, 43 days. Let's see. Past 10 a.m. on the 12th. Yeah. You might be able to make some good money if you bet past 10 a.m. on the Thursday right there. Congress saying they can't vote before Thursday. I don't know. Can they get it all fixed up and back open? What if they have a problem with what's in the bill? What if they smack it back down? What if they... I don't think Trump would vote to not open, but you know, what if Trump vetoed? That'd be hilarious. Then it would be Trump shutdown, I guess. So we'll see what happens here. Democrats holding out, but I guess Democrats finally caving. So we'll see if this can actually get opened or not. What do you think? Let's see. Let's do a poll. Did we get open before 10 a.m. on Thursday? Yes or no? Let me know. Man, there's a bunch of alerts firing off this morning. Wow. Bunch of stuff. So let's jump over and see what's cooking. And yeah, like I said, a bunch of alerts. ES. Now, I have an auto counter thing. It's counting this top of the 3, probably working on a 4, and we'll probably have a 5. And then we may get the bigger pullback somewhere down here. It's a pretty wide range, 100 points or so. Could it be shallower? Sure. But I think in this topping could be anywhere in this zone too, which makes it flexible for the next pullback. You may be like, well, what are the S&P 500 prices? What are the SPY prices? Come on, everybody. You can do the math, all right? Look, S&P 500 prices are running about $23 lower than ES. SPY prices are usually move a decimal over 1. So 682 minus like $1 or $2. So 680. And that can kind of get you to the SPY price. So come over here at 680. See? Easy. Easy peasy lemon squeezy. So when I give you the ES prices, you go down about $20 to get to the SPX prices. Then you can take about $2 off of that to get to the SPY price. When you divide by 10, take a couple bucks off. Pretty easy right there. It's not magic sorcery sauce. All right, it's all just math. Why does it run a little cheaper? Because of the carry costs here. This thing has costs. You have expense ratios. Blah, 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 blah. If you want one that runs right at 10%, here you go. This thing running just a little hot right now. 683. It's probably delayed. That's why it's running hot. And SPY running at 682. I mean, it's not rocket science, all right? It's not even complicated math. You just move a decimal, and it's kind of where we're at. This one, there is a little bit of, ES1 exclamation point minus SPX. We do have this little deal that happens where when we roll the ES contract over every 3 months, we have a large difference in price and it bleeds out. How do you know what the current difference is? It's right there. 22, 23 bucks. Right? It varies around just a little bit every day. It bleeds on down. It'll approach 0 as we get to expiration date on the futures, which is December for the ES contract. The ES contracts go, it's pretty easy. They go from December to March to June to September to December. Every year this happens. If you're playing in the market and you don't understand these dynamics, these are basic dynamics of the market. Now, this is a pretty standard way it happens right now, but it's not always the way it happens. Sometimes we get what's called backwardation, where it actually gets cheaper. The futures are actually priced in lower prices and they rise up. So it's not always the same amount. Sometimes we run up to 0. We start out lower. We have backwardation sometimes, and we have contagion sometimes. And back here, we're running higher. So futures were always pricing in lower. Back here, we're pricing in higher. You can see we go through periods where it gets really hyped up, and then we get some freaking chaos. This is probably coming. We had a correction in the market, and then it starts running lower for a while. We'll probably get back into this regime where the futures run lower than the cash. It's just a market cycle. Like, we're in a hyped up cycle right now. You can see there's some chaos back here. Maybe you remember that. Now we're in this period where we're like doing outsize pricing differences. It's actually fading off a little bit. Probably have another one of these chaos events somewhere over here. And then we'll probably have some backwardation. Contango backwardation. That's the two regimes. So it's not magic. You can go figure it out. If you're having trouble figuring out the SPY price or whatever, when I cover S&P 500, it's, I'm covering it, all right? Pretty easy. Now, looking at this, like I said, we probably got a little upside, probably got a correction. That's probably what's coming. And Tasty Trade logged me out just now. Cool. In Q, one big move up. Looks like we're coming back to test the roadmap line right here. Looking at the bigger picture, move off the high, down to that low. We came up and tagged that 618. This may be telling a clearer tale. Oh, look at that. Perfect hit, perfect hit. We may need a 618 retrace here. That would bring us back down before we can go higher again. That's what it's looking like. There's not a lot of clarity here. And maybe what we're looking at. Something like that. Russell. Is grinding this breakout. And these two highs right here, this one from back here in 2021, this one right here from last December, and now here we are just breaking out. We can't even really set big new all-time highs like we are on ES and NASDAQ. S&P 500. That's S&P 500, SP, and this one is NASDAQ, NDX. This is Russell, RUT. So we're not able to make these big rips higher to these extension targets. Maybe when we go tag 2600, that marks the top. I'm not sure the market's going to top out until we hit one or both of these levels. We may hit this one, retrace again, and then rip on up here. Still see that as very possible before the market tops out. RSP is another one I'm watching, which is the equal weighted S&P 500. We didn't just reject, but we're doing the same kind of pattern here that we're doing on Russell. So if we get a tag up here around 194, possibly 199, that could mark the top of the market. Now it's possible we take this on up higher, but right now this is not showing that kind of strength. Just not showing that kind of strength. You see the damage that was done to this one in 2022, and we never made it to the 1618. So we may get up in here somewhere around 200, but then not be able to go any higher for RSP. So these are the signs I'm watching for a potential top. So Santa Rally still in the cards, still has nice potential. Oil catching a bid today despite record builds all over the place. May come back up to complete this head and shoulders pattern. Then do we pop out or do we break down? Question mark, question mark. Gold coming back up to that 618 level. This is the level to watch right now. Right around 4,200. It can take a big dive down. Not looking for that being right up here tomorrow for the weekly gold rush trade, but hey, we'll play it by ear. Bitcoin is not doing anything bullish whatsoever right here. That move right there still leaves the door open to go down here. That little correction took 3 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 3 to 5. Usually it's been my experience over and over and over. The wave 2 versus the wave 4. That's probably 1, 2, 3, 4. And we're coming on down. 2 versus 4 on the timeline. 4 is usually 3 to 5 times longer in duration than the 2. Elliott wave stuff right there. And so that might leave us another 2 or 3 days. And then, so what happens in 2 or 3 days? Speaking of, what's in the poll? Look, 56%. So we got a lot of skeptics out there. Well, only 45 people voted, but hey, thanks for those that voted. Thanks for your participation. I appreciate it. Let's do another poll. So, government plan, let's make a deal, happens in 2 days. It might be setting us up for a flush out on Bitcoin. Stay careful. Stay frosty out there, everybody. Ethereum still hanging out under the roadmap line. That's still a signal for coming on down. Ideal target for that one down here around 25, 26. Right there. NKD. I may add some more short back to Bitcoin. See, I had on a put spread. Now we're back up near the top, the range. Had on a 59, 52 put spread, and it went up over 100%. May put something similar back on, looking for the rest of this pullback. Probably fly out to December with that, but it'll probably go quick. Now the only issue with doing it on this ticker right here over something like Bitcoin, which you can't really do shorts very easily, but based on just normal people with normal trading accounts, it's difficult to short Bitcoin. But the problem here doing it on this one is that Bitcoin itself could wrap this up over the weekend. You go down there like on Saturday and Sunday, be down at 92, and then Monday morning we're back up here. That would mean this position didn't, like if it goes fast on Saturday and Sunday, this won't move because it's not open, like the market's not open. So that's the big, that's the risk, trying to take advantage of it with options on something that trades 24/7, no holidays, no nothing. And speaking of holidays, thank you for all the veterans. Thank you for everybody that spent time in the military. David, Goose, Sledge. Thank you all. Skaggs. Major John, if you're here. Everybody else hadn't told me. Thank you all. Be careful out there, everybody. So there's that bit. DK or DXY dollar index coming back down to the bottom of the roadmap line. If we can hold here, turn back higher. 102 is the upside target or the squeeze starts. That's really going to propel this higher. But if we start breaking back below, probably right about here, about 98.5 ish. Let's put 98.5. In fact, let's draw it on the chart so I can remember what I said. If we get below that 98.5, probably going down. As long as we hold above that, we can go on up. Apple. Still grinding that same place we made highs yesterday. Still has the potential to take another move down. This could be a 1-2 setup. If we can get it back above, if we get a daily close above about 275, we can make an extension on up in here. Maybe 280, maybe up to 283. Kimberly, my favorite subscriber in the chat. And this one's still holding a 618 retrace. Potential to go down further. Google probably got to push on up to 303, 304. Meta working on that 618 retrace. We still have a little room left to the downside. Down around 580. If we get down there and we hold that, it'd be a good opportunity to pick it up because the next move could be pretty spicy on this one. We can hold that right there. That next move could be up here on Meta. We don't really have that kind of big up on virtually any other big tech ticker at the moment. Microsoft still has potential to come on down, retest this breakout area. We broke out back here. This was the June 24 high. Rest of big tech made a high in late 24. This one made a lower high and then proceeded to drop on down. Now it's made this extension, made a lower high. Probably going to come back down just a little lower, retest this zone, this breakout zone right in here. If we break through it, we have the potential to come on down here, similar to Meta. But right now, this just looks like we're going to retest that zone. Now, it can always do whatever it wants to, but this has been a pretty violent flush out, and I would expect it to come on down just a little bit further, find support. NVIDIA, being kind of volatile, has done a 618 retrace. So this is a cautionary too, like Apple, Amazon, NVIDIA, they've all kind of doing this first drop, 618 retrace, and they have this potential to get a next move down. Tesla on a whole different path here. We've just been grinding this area for getting close to 2 months now. Grinding, grinding, grinding. This might have to have a drop down into this 400 area before we can break out. Might have to do that. Right now, it just keeps grinding. We can keep grinding. The beta has bled down on this one quite a bit. Netflix. Now, a lot of talk's been about Elon's compensation package. It has to meet two metrics, not just stock price. Now, the first payout doesn't occur. Like, I figured out, why is everybody playing 600? Why are so many calls at 600? The first payout potential comes at 600. That's a $2 trillion market cap for Tesla. First payout. But he also has to have 20 million cars sold. Total. 20 million cars delivered. And right now, best I can tell, they've only delivered about 8.5 million cars total. Ever. That's a lot more cars to get his payout. So you're going to have to ramp up some, you're going to have to move some cars to get up to that 20 million. Then the next payout occurs on higher, and they've got to have 10 million to get the next payout. He has to have 10 million subscribers to the FSD software, on top of the share price appreciating even more. Some lofty goals. And then all the way to the 12th payout, share price would be $25.50 at the current number of shares with no splits or anything like that. That'd be the $8.5 trillion market cap. That'd be a pretty lofty. From where we are right now, that's going to take a little while. So I don't think it's happening next week or anything like that. Probably looking out 10 years, maybe. We'll see what happens. Got to have a lot of robots on the road. Got to have a lot of robots doing stuff. Got to have, there's a lot of performance metrics that have to be met to get those 12 payouts. So I think that the reason everybody's playing that 600 strike is because that's the magic number for the first payout, but he's got to sell a lot of cars too. So Netflix still holding in here at the resistance, can bring a bigger flush out, getting closer to split day. I think the split is going to yield this further downside here. I think that whoever decided they're going to do a split thinks that the stock price is holding this back from going higher. But even Amazon, when they did their split way back over here, the split was not exactly bullish. It was short-term bullish, and then they were already in a funk. And people looked at it like the share price is holding it back. You know, it can't go higher because of the share price. Then they decided, they announced a split, did a split, rallied briefly, and then went in the toilet. And then it took it quite a bit of time to catch up here. For a long time, I was like, Amazon is the catch-up play. And they just haven't really been able to really get crazy higher. Like, it's not like that split unlocked huge value for Amazon. And we have this potential to pull back again. So be careful on Netflix. That's what I would say. The list didn't look super spectacular today. I usually go try to find some gainers and decliners that look like opportunity. Race might have bottomed out, so we might be seeing it climb back up to this 450 area where the roadmap line is. C limited was popping, hit the roadmap line. Now we're dropping. Now the market's open. Not sure the downside's done here. This may need, you know, we hit the upside target. Now we're working on a retrace. It may need to come back in here. If we can hold this 618 at 150, that would be good, but I'm not convinced we can do it at this point. We may have to come back to the bottom of this consolidation, back down around 130, find support there before we can turn and go for the bigger up. Lin. Yeah, there's no three wave to it. I guess if we start back here, there is. This current drop looks more impulsive and hasn't really, we need something down in the 390 area. Word. Not enough candles to do anything. Rocket Lab almost down to roadmap line test. Look at that. I got out right there, and it hasn't really done very much since then. We kind of ground sideways. We popped a little and came back right there. Yeah, that one needs a retrace. Their financials are kind of crazy. I got some sales, no earnings. 50 years of sales. They can grow. They just launched some probes out to Mars, I think. We'll see on that one. Nugget, probably going to come back to the roadmap line. AEM, probably going to come back to the roadmap line. A lot of gold stuff, probably going to come back to the roadmap line. Shante Gold going back. Wow, look at that turn and burn higher. Be very careful there. Estee Lauder. That might be the roadmap bounce. It's a nice one too. Like that last pullback shot up there. Perfect. And get back through that 96 area. Be looking at 107, 110. And this has, if we can get through this zone, we have the bigger potential to go much higher. Next big resistance up here around 220. The real. That high, this low. Resistance 14 and 19. Then I'd watch for another one of these bigger pullbacks. Let's see, leveraged ticker. LEU probably come back for the roadmap line. Core weave coming back for the lows. Going down with crypto. VOR. Yikes. Did they just report earnings? Losing. We beat on the top, beat on the bottom, but not turning this into a cash machine like everybody hopes. RGTI. Reported earnings. Beat on the top, kinda, but still lost a bunch of money. Didn't. Wow, look at the revenue. Like, I know traders that make more revenue than that. It's crazy. They're just losing a bunch of money. 1,500 years of sales to justify the current. Yeah, that's dangerous. It's probably going to come back to the roadmap line. Still, looks like we ran out of juice. Got to find some support. Maybe at the roadmap line. Bloom Energy. Stuck at that big fib level. We're going to be bullish. We need to see this push on through above 290. And Hood still likely to come back down to the roadmap line. A lot of people hyped up on Hood. It just needs to take a trip down here and bum a bunch of people out. Maybe even as low as this. And then we can go higher again. Too many people hyped up on it. All right, setups for today. Things that are set up for an entry. Here's the high, here's the low, there's the entry, $9 on the target, low price stuff, caution. Things under $10 don't always work. And or under $20. When you got something under $20, big players don't usually play in that pool, and that leads to low liquidity. Ampy, $6.99 target, AVO. didn't kick off the algorithm, but here's the high, here's the low. 1424. Yeah. There seems to be a little bit of difference in where the high and low is. Oh, it grabbed that high. There it is. 1340. That I wasn't paying attention. That little dip right there went below the roadmap line, so it picked up this high and this low. There's the entry. There's the potential target, 1340. BNKU. There's the low. There's the entry, 3109. No history on that one. CNTA. A crazy retrace right there. There's the high. There's the low. Entry firing off right there, 2681. ERX. That one worked out back there. Talked about that back in July. No, August. Back in August. Here's the high. Here's the low. Entry 6218 target. And it's got fair numbers. They aren't statistically significant, but it's got fair numbers. Here's the high. Here's the low. There's the entry and 113.65 target. 20 trades, 83.1. FENY. Here's the high. Here's the low. 25.92 targets. Bad numbers on that one. Here's the high. Here's the low. Same pattern I look for. This is the same pattern that CashBot runs on. Right here. Anybody wondering, like, how does CashBot work? How does this work? How does that work? How does Apollo work? Same pattern. It's exactly the same thing we're looking for, just different time frames on all these different things. So 1729 is the target here. GHC. And we're looking for that high, this low. There's the entry. Target 1242. Wow, that's a long way up. 42 trades, 66%, 1.3. HIG. Here's the high, here's the low, there's the entry, and 137 target. Stop is always $1 below the low, no matter the price. IYE. Here's the high, here's the low. 50 is the target, right there. KWR. Here's the high, here's the low, there's the entry. 152.47 is the target. LTC. Yeah, I don't know if I like that one, but yeah, I wouldn't mess with that one. A little crazy there. NTR. We got the high, we got the low. Entry 62.71. It's got a lot of resistance getting higher than that too. OIS. Here's the high, here's the low, there's the entry, $7 on the target. Low price stuff, but this one tends to work out pretty good. PEB just says it tends to trend. This one's been chopping in here. High, low, entry, 1277 target. Snap. Got a high, we got the low, we got the entry, 958 targets. SNDX. Got the high, got the low, entry 1796. TFC. Got the high, we got the low. Here's the entry. And target up there around 48.50. TRP. Here's the high, here's the low. Here's the entry, 56.39. VDE. high, we got the low, got the entry, 132.35. WRB. Got the high, we got the low, got the entry, 79.66. Last one worked out pretty good right there. Fired off here, worked out here, pulled back pretty violently, 3-wave retrace. That looks good for going on up. 35.88, 3.6. I mean, that's a nice one right there. XHR. Sometimes you find a little gem in the rough. There's the entry, there's the target, 15.50. Lower price stuff, no statistics. XLE. Here's the high, here's the low, here's the entry, 93.92 target. Yeah, it's fair. It's just kind of an average. Profit factor is a little higher than average, but it's a pretty average ticker right there. So that's the list for the day. Bias for the day. I'm cautious here. I think we might be able to take this higher. One more high. One more high. But I'd watch out somewhere around the 68.50. Well, it's got to get higher. So 68.70 to 6,900. I'd watch out in that zone because we might embark on that bigger pullback I talked about. You know, one more high, then a bigger pullback. Could take a couple days on that. In fact, this may drift higher into Thursday. Then we get a pullback on the government thing. Then we go higher. Or maybe we pull back into the government thing. I don't know. All different ways it could go. But the level to watch out for, if we get down here, watch out. If we break below that low. If we break out up here above 70,000, watch out. Either one of these can signal a bigger downturn going to take place in the market. So this right here could last us on out into December. Maybe this could go slower. Doesn't have to go fast. But if we break down below this level, watch out. It's kind of an important level at this point. Somewhere around 66.50. We get down below that on futures. Watch out. You want to know what the level on SPX is. Just take a few bucks off. That's how it rolls. All right, everybody. Be careful. No disclaimer spiel today. You missed that, I do believe. Roll back. Anyway. Looks like about 84% plan on coming to 30 minutes of awesome later. See y'all later. Have a great day, everybody. Be careful out there. I'll be on Market Masters here in about an hour and 20 minutes. Hanging out with Jack, finding trades, talking about ways to make income in the markets. In case you haven't noticed, I'm about to cross 33K year to date. It's started on tax day. Almost made 33K in 7 months this weekend. Not bad. That's just one account with like $85,000 funded in it. So pretty good return. Be careful out there, everybody. Nobody cares about your money more than you do. See you later. 30 minutes of awesome. 5 p.m.